Hello, ladies and gentlemen, Greg Mikulowski from ForexLive.com. This is a Forex quick look and updated look at the Euro versus US dollar. Today's date is June 12, 2024. Let's get started. Last week, the ECB had their shining moment, I guess, when they cut rates by 25 basis points, but it was considered a more hawkish cut from the ECB. Today, the Federal Reserve has their chance to be in the shining light of the markets today, and given the CPI data much weaker than expected, I can't say much weaker than expected, but weaker than expected, the expectations is that the Fed will be more dovish in its unchanged decision today. More specifically, the market is looking for the Fed to project two cuts going forward between now and the end of the year. That was probably up from 1 to 2 cuts before the CPI data. So hope springs eternal, and that has the dollar moving lower. Taking a look at the euro versus US dollar, we talked about getting above the 200-hour moving average in the Kickstart video earlier today. We also talked about staying above the 50% retracement at 1.0817 area, and both of those, the initial move to the upside did stay below 200 bar moving average, but stayed above the 50% retracement as well, and that helped to prompt the rally back to the upside, getting above the 200-hour moving average, opened the door for further momentum. And you can see that the price more recently in the current hourly bar moved up to around the 1.0850. Now that move to the upside has now taken the price close to this swing area through here. Looking at the last few weeks of trading, we had swing highs through here, forced the price to the downside. We moved above the level here, extending to another swing area up here before rotating to the downside and using this area as resistance through here before moving lower. Again, we moved higher through here, extending to our high price for the month of June at 1.09153, but then moved back down into this swing area through here, and here before moving below the level on Friday during the employment report. So we're back up, retesting this swing area where it's more bearish below, bullish above, and we'll see if the sellers lean against this area. I would expect it. Why not? The price has had a pretty sharp run to the upside in trading here today and moving into resistance. And risk-focused traders would like to often look for places where they can lean, where they can limit risk, put a stop above the risk-focused level in hopes that the price rotates back to the downside. So trying to pick a top in the market against this swing area. If they're successful, the price could move back down toward the 200-hour moving average. If it breaks below that level, then they stand to see a move back toward the 50% retracement. Now the question is, how close do you want to sell against this swing area? Is this level still a bit too far away from what would be a stop type area above the 1.08617? That's up to you as a trader to decide, but look for if the price were to move into this area to find sellers within this area here with a stop above the level in hopes that the price rotates back to the downside as profit takers enter after the sharp move to the upside. So that's my updated technical look at the euro versus US dollar. Yes, the buyers are more in control. Yes, the technicals have shifted more to the upside, but we are running into some resistance above or soon to be resistance above. So be aware, be prepared. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.